Happy Monday. Happy trading. Nothing I'd rather be doing than trading, I tell you what. Let's go to the first trade of the day. We'll start with Intel. And what did we end up doing with Intel? Well, what we saw was we saw a three finger position and we saw a tail bar right here. So as soon as we got above, we bought in. And then as soon as we saw a color change, we bought more in. We first got in 2 lots, then we got in 1 lot, and then we let it go all the way up here, and then it kind of touched the 20 on the 2 minute, and it came back down. So we got out 2 lots. That was a good trade. And then it kept falling more, and we got out our last lot, which we shouldn't have got out. But we did because we moved that lot's stop to this point, so we got out right here. Let's say had we not taken profit so far, we would have had it way down here, or we could have said we had it right here. And that would have given us an opportunity to get back in here and go in and take advantage of the next move up. But anyway, this was playable just because of that bar, but the location's not ideal. Ideally, that would have been a position 3. I would list this as maybe a position 2, a high position 2. So that's not really the best scenario to be in. So let's look at the rest of Intel to see what we're looking at. So again, we have here's the 200, here's the 20. We have a relatively large gap between the two. What we could have done is we have I'm not going to call this an elephant bar. I'm going to call this a green bar takeout of a red bar right here in a wide state. We could have ticked that position, set the stop here. Right here, we have a color change, buy more right there. Rode that up. Let's see if we get any more action. And then maybe if we got in here, 1 push, 2 push, 3 push, we could have got out of 2 of the positions here. Let that ride back. We have that stop right here. It's riding back, it's riding back. Bam. We add right here. And see if we can get another 3 push move. 1, 2, 3. Get out right there. That would have been a nice trade. And now we have, another situation where we have a color change around a flattish 200. We get in right here, set the stop. 1 push, 2 push, 3. Probably get out right here. Leave a lot. Comes back. Do we get a color change? Not really. And then you have to keep in mind what time it is. Really, we want to respect that 11:30. So here to about 2. So we wouldn't trade till 2. So that's about 2. About 14 here. And let's say you could say this is a color change off or near a 20. That's a takeable position with a minimal stop right here. 1 push, 2 push, 3, probably get out right there. You see this previous support level right there. Let it fall back, and then you get that same scenario right there. You get a buy right here. 1 push, 2 push, 3, probably get out. And then you get another scenario right here to do it again. This one, we would just combine this bar with this one. So we have, this is a red bar, this is a green bar, and we have a bull 180 right here. That's a takeable position. Set your stop right there, and look at that. Bull 180 off of a inclining 20. You take that position right there, and then boom, 1 push, 2 push, 3 push, probably get out there. Let it fall back. Might be able to take this position, take a stop right there, and that's the end of the day. Let's go to our next position that we worked with. We worked with Uber. So Uber, we missed it. This was one of the plays that we should have took. We ended up taking Intel when our play for the day, one of our most flowable plays was Uber for the day. As you can see, if we look at it, here's the narrow state right here. We get the perfect sell bar right there. What we're going to do is we would either sell into that bar if we could. Let's look at it on a 1 minute. So yeah, it would have been perfect. So let's go back to the 2 minute. So the 1 minute was here, so we could have probably sold there, set the stop here. It goes 2 lots. It goes down. It goes back up. We get a color change here. We add a lot. So now we're looking at 3 lots right here. And then we get 1 push, 2 push, 3 push. Probably get out 2 lots right there. And then we see what it does. And then it's coming back, coming back, coming back. And maybe we would have tried again here, but as you can see with this one, we probably would have got out. That doesn't give us a good indicator that it's going to go lower, because that's a higher low right here. So that's how we should have played it. How did we play it? So we missed this entire first move, which was just money handed to us basically, but we missed it. So what we tried to do is we saw this. Let's see if we can space it out a little bit. We saw this right here, and we considered that a bear 180 at the moment. That's not a bear 180. We anticipated it a little too early. So as soon as it went against us, we got out. But that shouldn't have been a trade that we made in general. That's not a trade that we make. That's not on the list. That's not on the list. And if we do make trades like that, we try to make them on the 5 minute, where it's, hold on. Where it's something like you combine these 2 bars. So that's the red, and then that's the green, and that's the bear 180. But it's a bear 180 on a 3-finger spread, right? Or a green bar takeout on a 3-finger spread. So 3-finger spread, we want to primarily look at the 5 minute when we're looking at 3-finger spreads. So first trade could have been avoided. Second trade, what we try to do is we see this green bar takeout right here. So we do a buy here, and then we say, hey, this is a green bar takeout. We buy more. So we're looking at 3 lots right there. And then it goes all the way down on us. But our initial point of getting in was here, and it didn't actually get to our low point, but we got out. So that's something we need to improve. We have to trade the plan and not our feelings. So if that's where we were getting in, what we did is we wanted to even out the trade, and we did a break even trade. But that's not what this called for. What this really called for was holding your ground and just standing on business and waiting for this to go here. And had we had done that, it looks like the trade went up a little bit, but then it went down. So we got out. But it seems as if what we did is we got in here and we got in 2 here, we added 1 here. As soon as it went down to the break even, we got out our 2 shares. And then as soon as it got even lower to the final point, we got out our 1 share, so we're completely out. Where I would have liked it to be is that's where we got out our 1 share, because that was the ad. So we had a break even on the ad and we would have got out there, and then we would have got out on the other 2 shares right there. But that would have allowed for some space. But even still, we're playing this to go up on a 3 finger when there's no space between the 20 and the price. There is, but it's not enough, and it works better if it's on the 5-minute. So now we're looking at, hey, that's pretty much a significant, I'd say that's a significant bar. This right here is a significant bar. Let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's bigger than our last 10 bars, so maybe one could say it's an elephant. But I would just say, hey, if we look at the 5-minute and we say, hey, this is pretty spaced out, and now we actually get that move that we were anticipating earlier here. We get that green bar takeout, and then what's it do? That, and then we got a green bar ignore, and we could play it to here. If we look on the 2-minute, and we would have had a nice set the stop, add more, 1 push, 2 push, 3 push, get out, leave a lot, comes back, doesn't come back. We still have our lot on it. We still have our lot on it. Here we might be able to add. And now we're kind of getting out because it doesn't look like it's curling up on this. This would have been a nice buy. It's off the 20. We could have set our stop here. Keep in mind our 11:30. So again, we might not trade in this time frame, 11:30 to 2. Let's say we did. That's something we would take off the 20. Color change right here. Red bar takeout. Buy. Push. Get out. Leave a lot. let it come back, add more here, reset the stop, tried to go for the new high, didn't get it. We would have got out here. Tried to get out here on this attempt a new high, ideally. But we already took our profits here. So this is just the last lot. Let's go to, let's say 14. This is something we might have tried to take. As you can tell, we would have gotten out right here. That's nothing wrong with that. We can say we might have taken this one. Clearing. Set the stop right here. That's a pretty vicious over 50%. So we're going to try to damage control out of it. Nope. We would have got out right here. That's just a lost trade. Maybe you could see this and say, hey, take that. Set the stop here. Get out. That's just a lost trade. This is off the 20. Ideally, once it cleared here, you would have hopped in here, set the stop, split the bar, 1 push, split the bar, 2 push, 3 push. Probably get out 2 lots here, leave a lot. Probably could get out of that last lot here. Keep in mind we're in a position of power. Flattish 200. Can we get something that goes back up? No, it's the end of the day. Next one's going to be C. Now, when we look at C, C was also a rather good stock to have been in on the open. It's not one that I considered Intel my best play. Again, Uber and C were definitely better opportunities than what I got in. We look at a narrow state right here. We look at a position 1. It's a position 2. Position 2 are our hardest positions. It can go up. It can go down. Let's say we had a red bar right here. We had a red bar right here. In an ideal world, here's the 1 minute. We'd set the stop here. Goes down, goes down. Probably 1, 2, 3. Get out 2 shares. Leave 1. Comes back. New low. Get out right here. We got out all our shares. That's a profitable trade right there. Again, we got in the position of, we saw, hey, 1, 2, 3 finger spread with a green bar taking out a red bar. We wanted to play that up. As soon as we tried to play that up, it went up. Then it went exactly down on us. So we just got out, limited our losses. Ironically, maybe had it not went down so far, it would have went up a little bit, but at the same time, it went right back down, so it might have been more advantageous to still be in this as a sell from the get-go, and not have taken profit here. And that would have just been the pullback, and then re-entry here, try to sell. Now that right there, let's say this is just me trying again for that same three-finger spread, which that was a waste of a trade right here. Don't make these trades. Like, it's within the same bar and it doesn't do anything, so there's no purpose to it. I can see potentially all of these tail bars right here, so this gives me an area to say, hey, maybe things are going to go up. You get a nice elephant bar or a solid bar, bigger bar than we've seen in the past 1, 2, 3, 4, 5 green bars. So that gives some type of significance. And what happens is you get the green bar, you let it ride down, you get a red bar takeout right here, you buy more, and then ride it up. New high, probably get out two of the positions, and then let the third one ride. Let's see what it does. Keep in mind we got in it here, so the stop's right here. It's on break even. It rides, it rides, it rides. And that's how you get one of the bigger trades. But that's not what I did. What I ended up doing, I bought in here, right here. I looked at this as a tail bar right on a inclining 20. Like here's the 200, here's the inclining 20. So I bought here with my stop set here. As soon as it hit there, I got out. I got a green bar, I'm going to say elephant bar off of an inclining 20. We take anything off of the 20, off the 200. So we took it here, set the stop here, and we got a nice move here. What would have been nice is a add here, since it did a green bar takeout. And we just got out here. Not 100% why. Kind of just got lucky on that one. Just got out. We got in here, 1 push, 2 push. We considered that a third push, but it's not really significantly far enough away from our entry that it would be a push that of significance that we should take. We got another move off of the 20 right here, and that didn't work for us, so we got out right there. And then let's consider this just 11:30. We'll avoid this until about 14, unless we see a move, and that would have been a move. And that move is right here, off the 20. Set the stop right here, sell into this bar, add here with the color change. 1 push, 2 push, 3 push. Probably get out of 2 of them. See if it's going to pull back. It doesn't pull back. It keeps going. It keeps going. Right here, probably get out of the last lot right there. or just let it ride itself back, because our break even stop would have been here. But we get a nice market law 4 right here. It breaks in to the 20, and then it's caught right here, goes up, caught again right here. At this point, we should be playing it up. So let's say we're playing this market law 4. We'd set the stop right here. We get the push here. It comes back. Our stop's here. We add more here. Let it ride here. And I guess we had previous resistance, or this is a large red bar, and that's the top of that. So previous resistance right there. Get out right about there. So now we're looking at, that's 30. We could look at this one, off the 20, buy, set the stop, pile in here, 1 push, 2 push, 3 push, get out 2 lots, let it ride back. Doesn't ride back, it rides tremendously. I would let one ride and then big bar stop, big bar stop, big bar stop, big bar stop, and that's a position of power right there, and that's off of a 20. Those are the moves we're really looking for. That's going to make the biggest difference. So our next trade is going to be Walmart. So Walmart, we had an issue here that I'd like to avoid in the future. We had a crash into support right here. That crash into a support, we can sell that, get out here. It comes back all the way again. We get another crash into support. We could sell that, get out around the same area. Now we're looking at flat 200. We know that is a red. We split it in half. We split it in thirds. If we get a takeout right here on the third spot, we sell. New lows, get out. Comes back up. Now we're on a flat 200. I think we could look at this and this as a bull 180 off of a flat 200. We ride that. New lows, get out. What we ended up doing is we saw this off a 20. We took that, sold 2 here, got out 2 here. It would have been nice if we added here, or if we would have caught it here. But it was good. We left one on. It came all the way back to our break even, so we got out. Now, I'd say this is a torpedo right here. And we're looking at a higher low. Higher low means something important. It's going to go higher. And then we get another higher low right here, which is a green bar takeout of a red bar. That is a buy that we could set the stop right here. And look at that. That would have been a nice trade right there. And now we're at 11:30, which I guess you could say, hey, power position. We could look for this, but we didn't really get that move. And it seems like that was a area of resistance right there. Anyway, here's a large sell off of a 20. I'd take that. Add right here. 1, 2, 3. Get out. Leave a lot. Get out. Right here we have a tail bar. Tail bars are takeable. Let's see if it does anything. I mean, it's 11:30. We could avoid it, but tail bar. As soon as it gets past it, set the stop right here. That's a nice little trade. You could try it again here or try it again here. Here's off the 20. Hopefully, if it's clearing at this point, you'd get in somewhere around here. And you'd say, hey, 1, 2, 3. Probably get out some of my position. Still got one lot left. Set the stop right there. It would have knocked me out, unfortunately. Unless maybe, I don't know. But it probably would have knocked me out. But as you can see, position of power. Green bar takeout. Might be worth playing. Who knows? Our next stock's going to be Mark. Mark's a good stock. I think it's a good stock we could have played. We just didn't. And the reason we didn't play this one is because the 20 was angling, and we felt it was angling, or the 200 was angling like a 20. So you don't really know with how those are going to go. But this is a narrow state right here, and it's between the two. We get an elephant bar right here. Anticipation after 1 minute has us right here. Let's say we sell. 2, it goes down. That's a pretty far move. That's 1, 2, 3. We could probably get out of that position if we wanted to. Leave one, doesn't really matter. That move up is pretty violent, so we might damage control out of it and get out. Again, that move's violent again, so we got 2 of those moves that are pretty violent. So it seems as if in this area right here, we can expect moves that would go up. We got a green bar takeout right above that area. I think that's playable. Set the stop. Nope, get out. That's off the 20. Playable, set the stop. Add right here. Maybe get out of the ad right there. Get out of the play right there. $11.30. Let's just stop because that seemed choppy. So probably going to be choppy for a while until like 14. That seems like a move we could have tried, even though it wasn't in our hours. Off the 20, we get in it, add more here, comes back, pops up, get out, distance away, waiting for it to come back, and then buy more. Here's the move. Half is here, thirds here, another thirds here. Take out there. Buy right here. Green bar takeout. Set the stop. Perfect timing. 14:30. Rides up. Probably would have got out majority of our shares here. Let it ride down. That's a nice glide down. Not too dramatic. Let's see if we can get another move up. Looks like we did. Get out. Oh, wow. Oh, well, that was the wrong day. So that makes sense. So let's go to the right day. Here's the 9th. Would have avoided, this is in the trap zone. Would have avoided all of this. Maybe took this position off of the 200. Took that down. This seems like pretty far away. Rode that back up. All of this is kind of conjunct. What we tried to do is we saw this elephant bar. We considered it an elephant bar. Now looking at it, it's not. But it was off the 200. So off the 200, we're going to play it down. It went against us right here, as you can see. So we got out. And then we got an elephant off of a flat 200. So we bought into it. And then, boom. And it just went up so fast that we got out. But it looks like we got out a little early. We could have just left it in here. Took more profits. That's a pretty far bar, but I guess you could consider it off the previous close. Let's just play it for shits and giggles. Nope. Get out. Wouldn't really have been a play based upon our list. Now that's a play right here. You're going to say off of a flat 200. You buy into that. 1 push, 2 push. You could say color change, 3 push, get out. You know it's going to roll back. Color change, set stop right there. That's kind of a sign it's going to go down, so getting out there would have been nice. Oh, look at that. And then you have a color change off an inclining 20, so you take that and boom. And then you get it again right here. Boom. Next is going to be CVX. Here's where we lost, I would say, majority, but for good reasons, I think. Here is a crash into support, and we expect this to come up a little bit and then go down. But what happened with this one is it crashed into support, but it went greater than 50%. So now that it went greater than 50%, we know it's probably still going to go down. 1 out of 10 go all the way back up. But what we need to know is, hey, you're probably not going to go lower. You're probably going to go at 75%. So right there, take that gain right there. It's going to go up again. See if you can play that again. Looks like you can't. Remember, this often plays like the 200. So you have another position of power right here in a sense. So, hey, you might play this if you could get this here. Looks like that would have canceled that out. Maybe you get this one, ride that up, get some profits out here. This goes down, and I wanted to sell on this one. I missed it, but the next bar was so vicious that I didn't want to do anything. But since that was so vicious, it should have made sense to just short this bar right here, because that's indicating a top, which you know it's a top because that is a red bar, and often right here is where resistance is. So as you can see, hey, that was the resistance area 2. We got it here, right here. Sell. Boom, boom. Get out. It's not what we did, but it's not a bad one. So this is when we should have shut it down. We didn't. We had a nice elephant bar right here off what we said was a 200. We hopped in the shower. As soon as we hopped in the shower, it went completely against us and got out. We saw that, so we tried to stop and reverse. As soon as we stopped to reverse, it went the other way. So that's kind of what they mean, chop area, from this 1130. So let's say I would have avoided the chop area till 14. So I would say, hey, this might be a 3-finger, but I'm gonna keep in mind we like to play 3 fingers only on the 5 minute, so probably avoiding that. This would be a nice, hey, it's coming down. This is going up. Flat, position of power. Bar takeout, set the stop here. Nope, that didn't work. Same thing, set the stop here. That didn't work. As soon as it goes above it, set the stop here. It probably would have been something to take profits on. This off a flat 200. 1 push, 2 push, 3 press, get out. So those are the moves we made for today. Hope that helped. Be back at it tomorrow.